fundsupermart.com.
Since the DWS Invest Top Dividend is a new fund on our platform, can you tell us more about its investment philosophy with its focus on dividends?
Sure. Dividends explain most of share market returns over long periods of time. For instance, with the S&P 500, dividends and growth in dividends explains about 90% of the return generated by the S&P 500 since 1927. So dividends are very, very important, and that holds true for all other countries as well. And the reason is that dividends offer a cushion or a safety net. Companies that have yield tend not to cut those dividends in economic downturns if they can avoid it. And that means that when you have a fund that's investing in companies that have high dividend yields, they don't go down as much typically as the rest of the market. So you're starting from a higher point than the rest of the market in periods of recovery. So this means over the long term, you're accumulating wealth faster than the broader market. And that's the underlying reason why we like dividends. The fund itself invests in companies that are typically large, they're global in nature, it's well diversified, we like diversification. We just don't focus on dividend yield, we focus on dividend growth and the sustainability or the ability of that company to pay that dividend in the future. So they're the three important points when looking at dividend paying companies.
Does the fund have a benchmark, and how much consideration is given to this benchmark in the fund's portfolio construction?
Yes, the fund does have a benchmark. It's the MSCI World High Dividend Yield Index. Now that's a subset of the MSCI World Index. It's currently only about 315 companies. The MSCI people screen the broader world index. They look at dividend payout, the dividend yield, and the sustainability of that. And to qualify for entry into that, the company must have a dividend yield that is 1.3 times higher than the MSCI World Index average. We don't pay a lot of attention to the index. We're cognizant of it. We do actually have views that differ from the index, and we also invest in emerging markets, which aren't included in that index. But basically, though, at the moment, we're underweight healthcare and we're underweight financial stocks. We do own insurance companies and some banks in Canada, which are relatively safe compared to Europe, but we're very much underweight European and American banks currently. Healthcare is another issue. Healthcare has been very much the investment du jour for many fund managers. And basically, we find that many of the healthcare companies are somewhat overvalued, so we're underweight healthcare.
Equity funds focusing on dividends have gotten rather popular in recent months. What makes the DWS Invest Top Dividend special?
Well, it's run by DWS, would be a good answer to start with. We're probably one of the earliest investors in dividend strategies globally. We've been doing this since April 2003. We'd have one of the biggest teams in the marketplace, and we've certainly got one of the biggest funds. It's 8 billion euros, or more than 8 billion euros currently, in the full strategy. So that makes us the biggest player in the world in dividend strategies. We also have a very good track record, a long-term track record, and all of those factors are recognised by Morningstar, who've given this fund a 5-star rating.
With its focus on dividends, will the fund's portfolio be skewed towards mature large-cap stocks?
It does tend to be large cap. That means that we don't have size constraint on the fund. We could probably take this out to 20 million euros and it wouldn't affect the way we manage it. More than 80% of the fund does tend to be large cap, but as I said before, it is well diversified. These are companies that are large, they have very strong balance sheets, in many instances better credit rating than some of the governments in Europe, for instance. And basically they've got that high dividend yield. So that's what we do, and that's the way we like to invest.